Chesapeake, and I don't want to have them show up, and you know how it is, man.
I haven't. What you building on it?
Well, we are blessed to have a new Haskins house. We haven't got the building permit yet, so I'm holding tight to the vest until we get the permit,
Okay.
and then I will share it all out, man. I haven't even showed any of my YouTubers, my roundup homies yet. It's 3,600 square feet, but we'll see. Man, you have no idea. This has been a journey since January, Larry, and I feel like I'm an expert.
This is okay, so, man. Because you've done new development before or new construction,
Yeah,
haven't you?
all the time, all the time. But this, what I'm going through now, I'm not even going to say nothing until I get the permit. Then I will let you guys know the hell I've been going through for the last few months.
Going through
Round up homies,
right
huh?
now.
Yeah, I got
Going
to
through
keep
a
it to
few
the
hookups
vest.
right now for some new constructions we're doing out in Suffolk.
Oh my lord! If you got, you know what I found out? If you got the right team, man, you can do anything. It's really about the team. If
Yeah,
your team sucks, if you got one bad player, you're done. You're done.
yeah, that makes or break a lot of deals. And like I said, man, I get more into like the syndications, multifamily aspect of it, and you start to see people want to know more about. Because a lot of people, I mean, past few years, has been eating good since the recovery from '08.
Hmm.
But then you can trip and almost find a deal at any given moment. But it made a lot of like novice and people that don't know what they're doing like very successful or look very successful. Um,
Look, this does over here. That's me.
because once you refinance in terms of, I mean, prices are still going up. I mean, yeah, you can pull out everybody's money and everybody get paid and all that stuff. So like now operations and all of that is going to be huge going forward.
So, Roundup, it's good to see you today. Every week, I like to bring Larry on because he is the real estate CPA. He knows all the information regarding taxes and entrepreneurship and buying and selling and syndications and private money, all that stuff. So, he is the master when it comes to taxes in general. So, today, Larry, I asked him what he want to talk about because I have no idea about this stuff. He's the expert. And with continuing with my commitment to raising your financial literacy, Larry Pendleton is going to talk to you today about when do you know when to file a separate business tax return. So I think there are some key indicators or KPIs that one can look at when it's time to do that. Larry, thank you so much for coming on, my brother.
Appreciate it, Chris. Grateful to be up here as always.
Yeah, man, you the man. So give us real quick background, and then we'll get into this thing.
No, Larry Pendleton, senior partner of PC Financial Services based out of Norfolk, Virginia. Our mission is to help people achieve financial freedom through real estate investing and tax planning. So we special real estate is our niche. Also investors as well here locally in other states as well, and always looking to connect with others and build where we and help build along the way.
Good, thank you, thank you. So what did this thing came up in your mind to talk about filing the separate business tax return? Just tell me first of all, before we get to that, what normally do you see, and then what makes people say, I need to do that?
Well, it's appropriate timing. Deadline coming up. I guess
When is that? Is it Friday?
Thursday.
Thursday? Lord have
So a
mercy.
lot of your S-corps. I know we did a recording on that a couple of weeks ago, as well as partnership tax returns. So if you're filing a 1120S or a 1065, and this is for people who have extended from the original deadline, which is March 15th. And I tell people like I don't file my taxes until like I get extensions because like I especially when you do this with like you're serving other people, then you get to yours. So it's like it's this relief that the final tax return that I'm filing for 20 for the previous year is my own. Uh,
Oh Lord, that
Plus,
is too bad.
I'm also really big on just squeezing every juice out of the savings or tax savings or whatever, so it doesn't happen within that 2.5 month window of getting your S corp or your partnership tax returns filed. So seems like an appropriate topic this week with the deadline literally a couple of
Oh
days away.
Lord.
But I also get a lot of questions from people of or situations where they're working with somebody else, they're closing on deals with people, and they plan on 1099ing each other, but they have an operating agreement in place, like both their names are on the settlement statement or the HUD or closing documents, wherever however you want to call them.
Mm-hmm.
It's like, well, you all are operating this thing together, so you actually have a partnership in place. And catching people off guard because like they didn't prep for that. They didn't think they'll have to file a separate tax return. They barely got the 1099s out, and it's like no, this is like you all are equity partners in this, how you are operating. So you have to be cautious on how your operating agreements are set up. You gotta be cautious of how you're registering with the state, with the SEC, and also be cautious of how you're filing for your EIN number. People are getting these SS-4 letters from the IRS and not really sure like which tax return to file. But if you know what you're looking at, you'll be able to quickly identify that.
All right, we got to bring it down a little bit, Larry. You up there flying with this astronauts. What's the SS-4? What, I don't even know. What are we talking about, bro?
So when you we all go try to be legal attorneys ourselves and set up our entities online, get our EIN number. You hear about how quick and easy it is and do it for free from that standpoint there. So we're just some true, some false to that as well. But when the your supporting documentation, what the IRS is going to give you is what's called an SS-4 letter. And that is basically identifying your EIN number. So basically your entity's social security number per se, and then you'll also can tell uh, what type of tax return you're going to be filing. If it doesn't show like a particular form on that page that you need to be looking out for, is most likely a single member LLC. That means it's just you by yourself, and then you're going to be reporting all your activity from your business on your personal tax return. And those, of course, aren't due until April 15th, and if you extend, October 15th.
Gotcha.
But also on those letters, you can also see if there's a Form 1065, Form 1120S, Form 1120, or actually Form 1120 from that standpoint there. And if you see those forms, that's a separate tax return. That means you have to file a separate business tax return. You have registered in a way that alerted the IRS that they will be receiving these tax return forms from you. I mean, if you're not cautious, if you're not aware of that, you could be seeing significant, like I won't say that you'll be seeing penalties for late filings for not getting the stuff reported. And Form 1065 is basically your partnership tax returns, you or however number of partners you have. Your 1120 is your C-corp tax returns, which pays its own separate tax rates and all of that. And then if you have filed a Form 8553 or 8556 or 2553 to be elected to be taxed as a S-corp, then you'll be filing a 1120 dash S tax return.
That's me, bro. Okay.
Which it still can be just you, but it's like I said, you're fully separating yourself from the business and becoming an employee of your own business.
I love it.
We don't gotta go back down that. But yeah, like I said, but that's what the SS-4 form is really a letter is really stating at that point. EIN number and then what type of entity that you're going to be filing as on your tax return.
Whew, that was a lot, y'all. Give us a thumbs up for just knowing Larry. Y'all give Larry a thumbs up for just breaking all that foolishness down. Larry, you know this stuff, but do you dream this stuff? How the heck do you know all this stuff?
I mean, you kind of see the same things over and over again. So it's only, I mean, besides 990s and T, like I don't get much into nonprofit tax returns. So you kind of see the same type of tax returns over and over again. So it helps with kind of like this kind of being more of a sniper when it comes to the information that I'm trying to relay out there.
That's cool. All right. Round up. If you're just joining us, we're here 10 minutes. Larry Pendleton, CPA, just talking about when do we file a separate business tax return. So, okay, so that's where we are before. So now, would a person? Is it a time for them to say, "Hey, I need to do this" regarding their personal, I guess, doing partnerships with people, or what does a partnership look like that would require to be a different tax return?
Yeah, so let's just say you're flipping a house with someone, and you all put money in the deal, and you're going to split the deal equally from that standpoint there. In that case, even though you don't have an entity set up with this person, you don't have an EIN number at that time set up with this person, you are considered in a general partnership. You are splitting the equity with this, unless there's a certain agreement in place that this person is working for you as a contractor. But if it's just kind of just straightforward, like we're going to split this deal 50-50, you have created a partnership with this person, and you just can't really report half the activity on one person's tax return, the other half is there. Like it has to be reported together, because that's how all the documentation is set up. Unless there's evidence of payout from one person to the other, or the whole deal was under one person's name. But if it's a deal that you're working with somebody together, and or you have an operating agreement in place, and like we're going to split the equity and all that of this business, then like you're in a partnership. And you need
Gotcha.
to be real cautious on stuff like that. I mean, I'm always a huge proponent of partnering with people. It's just kind of know what you're getting into and what the ramifications are of additional costs, whether it's legal, tax, all that stuff there to take into account.
Wow, that's something right there. The partnerships. Are you saying that they're due at the same time as the business
Yeah,
turn?
so anytime you come up with partnerships, whether there is any in place or an LLC partnership, that goes on your form 1065, and like that's due March 15th and then extended to 9/15 in any given year. So, and that's the
Gotcha.
same as your S-corp tax returns, which still could just be you, but those still due March 15th, and extensions are due 9/15
Yeah.
from there. And the general premise is the best way to think about it is that no one can file their personal tax returns fully without their K1s. They get their K1s from 1065s and 1120s. So government has actually set that up with, okay, you file your business tax returns at the time that gives you a month to get everything else in order, so that you can file your personal tax return.
Gotcha. So that's due. Personal tax returns extension is due October.
Your extension is due October 15th.
Okay, so you do you got your business stuff set up, which is going to determine your income, and then you can
Yeah. Yep.
make sense.
I think for
Makes
this
sense.
year, I think the personal is actually due October 17th. I think the 15th falls on a Saturday.
Oh, okay.
But like that's all like year change. But those are the main deadlines there. March
Okay.
15th, September 15th for your businesses, April 15th, October 15th for your personal.
Cool. So what did we keep in mind, Larry? What did you have in mind regarding people needed to do a separate business tax return? What were you thinking?
Yeah, I mean, it's not just getting to make sure you got all the 1099s out. If you're going to be doing partnerships, making sure that
Partnerships.
the splits in like the equity splits, the cash flow splits, capital splits in your from your operating agreement agrees to your tax return, because you don't want to be only getting 25% of the equity when you're supposed to have been getting 50-50%. Some people may may want the 25 for a lesser income, but all that has to be accurate. And then if you're ever um, uh, to the supporting documentation will be the operating agreements. Like, why is this not tying to that? So it's make sure you're having those conversations with your partners. If you are trying to just keep everything separate from other people, then you do want to make sure all agreements and stuff are kind of under your name, under your business name, or however you want to be direct from that standpoint. And then you're issuing 1099s for payments that are going out for someone who's not technically a partner of yours.
Hmm.
But like that's where it's like, a this isn't the time of year to be trying to figure that stuff out now for last year. Now you can work that stuff out now for your 2022 taxes, but if you're just now like learning about this stuff and figuring out, it's like, okay, just go ahead and get ready for some late filing penalties to deal with,
Yeah.
because there's no one's like, someone can turn around your tax return overnight, and there's other ways to do around it, but it's like it's not going to be fully done and accurate. It's going to affect when you can file your personal if you're
I
still waiting
got
on
you.
K1s
Yeah.
from your, so one's always going to tie to the other there. So I just want to make sure that you're having those conversations with your partners, your advisors, like at the time of year where there's not a deadline,
I
like
got you.
right around the corner. So just to give you some breathing room, and that's when tax strategy and tax planning are actually the most effective during the year, and before any major changes are about to happen, so that you have time to adjust those certain elections or certain tax deductions before the end of the year.
Sweet. So roundup, we're here. You're getting the information right from Larry. He's a CPA. Get your questions in there. If you got any tax questions, Larry's the man to ask. You know, the guy's like a walking dictionary. So go ahead, Larry. So the person, is there a question? I heard you say partnerships, who you're working with, S-corp, C-corp, all that stuff. Is there a question that they should ask themselves? When do I know that it's time to go business tax?
They definitely know if, like, when it comes to the S corp aspect of it, is really more so is where is your net income looking like for if you're just a single member LLC,
Hmm.
because you're hit with self-employment taxes on your bottom line on top of what your marginal tax rate is,
No
or your
good.
effective
No
tax. I
good.
guess really, I guess I pretty sure your effective tax rate. Um, so depending on your bottom line, you may want to start considering making elections for S corp, getting that form 2553 filed this year for 2022, and just kind of letting the IRS know you're just kind of learning about these elections. And then at that point, I tell people, unless you're netting $50,000 a month, a year from your business, doing the S corp election is not really going to make sense cost wise. Like, you have to pay for a separate tax return. You have to start setting yourself up a payroll. So are you going to pay for that, or are you going to do it yourself? So it's going to cost you time and or money to do that, and filing 940s and 941s quarterly, annually. Like, there's a reason why our firm doesn't do it, because it's like I said, it's just it's a lot of mundane stuff and keeping up with your payroll. So if you're looking into be a S corp and potentially having to do that, just make sure that the tax savings is outweighing the cost of doing it.
Yeah, it
Now, some
ain't
people may
cheap.
still do it because they want to keep all that stuff separate from their personal tax return. Also, even though you'll get a K1 that's going to be reported on your tax return anyway, so you'll catch people still want to do S corps, even if it's not financially beneficial.
Mm-hmm.
But everyone's situation is different, even from a C corp perspective. Whereas, like, okay, you may be doing a lot with wholesaling, doing a lot with flips and your rentals, and you don't want all your income showing up on your personal tax return, because the corporate tax rate of 21% on a C corp is better than where your tax rate is on your personal. So you may want to have a separate C corp business to offset some of those tax savings. Whereas, like, hey, you can go from 27 to 21% taxes on your on that business income. But once again, you have to know your numbers. You have to meet with your accountant, your advisors, to know when you want to make that switch over to your C corp.
Mm-hmm.
Especially if you try and all that. So that's going to go into your financing and all that stuff there. And then with your partnerships and your 1065 is just really getting an idea of what are you doing with this person that you're working with, that you're splitting this deal with. Like, what's their role in it? Like could we be perceived as partners based off the agreements and documentation that we have, or how we're operating going forward? Because if that perception is there, even if there's not an entity set up in place, you are having to file a business tax return and get an EIN created in order to file a business tax return for this for that work that you two are doing. So
Hmm.
catch a lot of people who are buying and holding properties together, or even doing flips together. You'll catch a lot of situations like that.
Wow.
They kind of um, unknowingly just kind of went into a partnership with someone because they're splitting the equity and the uh, from the property.
Gotcha. Interesting stuff. Well, that is some cool stuff to know. So roundup, you may be time for you to do that. It could possibly be time for you to think about filing. I know what we did a few years ago. I'm an S-corp now. Well, look, well, I just think as over time you grow and you get bigger, Larry, and you want to do things like our stuff is direct deposit every month. I'm like, I don't want to think about it. We pay taxes. I mean, it comes right out of the business bank account.
Yeah, I mean, at some point, it's you're never in a situation where you're just kind of set everything in place and then forget about it. Your tax plan, your legal plan, your entity structure, all of that is going to evolve along as you're evolving as well. And that's where the significant tax savings are. Those are kind of evolving and growing. If you
Mhm.
just kind of remain stagnant, then you're probably going to see heavy taxes, or like I said, just not really reach that financial freedom that whatever that you're trying to
Yeah.
reach from that standpoint there. So
Mhm.
it's you always having to kind of keep tabs on what different things, and no different than examining different markets where okay, you may just be tapped out of one market, you may start looking somewhere else or a different strategy from an investment standpoint.
Yep.
That investment switch is going to then affect your entity structure and your tax strategy as well.
Hmm.
So all of it's going to evolve as you're doing different things and evolving along the way as well.
Well, we don't have any questions other than AJ moved from an LLC to an S corp. Good for you, AJ. He's another entrepreneur. Well, that's all we have. Final thoughts for today, brother Larry. It's a short one. I just wanted to make sure people understand. You might want to you might want to consider, or at least think about where you are with your business. Is it getting bigger? Is it staying the same? Your legal standing changes. Yeah. Yep. Go ahead, Larry. Final thing, and then we'll get you out of here.
Yeah, main thing, like I said, with the deadline coming, and if you already like have this stuff in place and you haven't gotten everything over, or you just got it
This
like
ain't
a
the
couple of
time.
weeks, like
Mhm.
it's like work with your tax advisor on ways to mitigate your late filing penalty or your non-filing penalty for your business tax returns. The main thing is just kind of get something filed. Like I said, even you have to amend, make sure everything is accurate from that standpoint. I know a lot of people are worried about amendments and audits. Um, I mean, audit is almost the cost of doing business in this country.
I
I
know
hate,
it is for me.
it's like there's ways to mitigate it, like, but really it's having your documentation. It's not so much of like if I can like prevent this from happening. It's like am I ready for it to happen? And
Documents.
you don't do anything still like you don't if you have if you're flipping houses and that's your business, but then you have um no contractor fees or whatever from there, like so you're just building these houses yourself. So like yeah,
You're in
there's
trouble.
ways there's ways to
Please
mitigate
don't do that. Yeah.
likelihood of being audited. It's just that if you are audited, I mean, are you ready for it? If you do get a letter in the mail, do you have supporting documentation to address it and move forward?
You better
Um,
have some contractor fees, bro. You better
yeah,
have some.
like I mean, like I said, I'm part of some flips, and it's like okay, like you won't see a hammer in my hand. I can't say that I built this whole place out by myself. So like we're going to be issuing out 1099s, and that's supporting documentation for that line item that comes up
Hmm. It'll come up.
from there. So even from like even if you're a real estate agent or a broker, where it's like okay, you're not going to have a lot of repairs and maintenance for your agent business.
Hmm.
Now, if you got it mixed in with your flip, you need to highlight that. But if agent have a whole bunch of repairs and maintenance on his or her line item,
I see.
it doesn't really make sense.
Gotcha.
So your
Gotcha.
expenses have to make sense to what you're to what you're doing. So So that, like I said, that's just my thoughts on that. Like I said, there's ways to mitigate the penalties now. Like I said, work with your advisor, and then start to have those discussions on how to do better now in preparation for your 2022 taxes, because this is when the tax savings are.
Ricky has a good question. Do your legal fees get deducted from your taxes for all the mess we have to spend for S-corp and all that?
Yes,
There.
all that part of those are business expenses of operating your business. Yes.
Cool. So you're good with that, Ricky. All right, round up. Make sure you subscribe, like the content, share with anybody else that needs to understand these taxes are going to be your biggest expense. I cannot tell you how much taxes we pay every month. It's ridiculous. But I have to remember when I'm paying it, at least I earned the money to pay it, right? I have to always consider, Chris, at least you made the money. You got to think about that stuff. I don't know any way around it, Larry. Maybe I'm just missing the boat. People, I hear dudes making big money and not paying no taxes. I just never figure it out.
But I mean, that's a huge misconception. And okay, I guess we're gonna get on this soapbox now.
This go ahead.
I mean, no, it's a perception that like the wealthy don't pay taxes, and it's like they actually do. They actually pay a lot more taxes than the everyday person. The difference is people mainly are looking at the tax returns, and that's just your income tax. But the wealthy, like you're buying properties, like you're paying real estate taxes. Like you can try to get around not paying real estate taxes if you want.
I ain't figured that one
like,
out. They're worse than the IRS.
Yeah, you're going to pay real estate taxes. You're going to pay sales tax. If you're growing and hiring people, you're paying payroll taxes. Like business and entrepreneurs are paying taxes. Like I said, people just get wrapped up on the 1040 tax return, but all of that is just the deductions that they're able to claim from running these businesses that they're paying all these taxes to. Plus, they're taking all these additional risks of like hiring people, buying properties, renting them out, selling them, and all that there. So, as we mentioned before, when we first started this thing, the tax code itself favors the wealthy in offsetting their income. And to go even deeper off that statement, from offsetting their 1040 income, because they're paying all these other taxes in other areas, that's reducing their taxable income from their investments in their businesses. So yeah, like you're not going to be able to get around not paying payroll taxes, but like I said, that becomes an offset to your income tax.
What is this? Karen wants to know. I got 3 minutes, y'all. How much revenue should I earn to switch to an S-corp, Larry?
My threshold is a net of $50,000 a year. Some advisors are higher, some are smaller. I think 50,000 at least is having that discussion point of at least kind of seeing everything that you got going on, and then running the numbers to seeing, okay, here's your potential tax savings from doing it, and here is your cost of doing it. And if one is not outweighing if the save is not outweighing the cost, then you may have time to just kind of reevaluate and change from there. The thing is, because once you make that switch over, like you can switch back out, but then you can't go back to being an S-corp for 5 years. So it's really getting an understanding of your numbers, and it makes sense for you before making that decision. That's why I say 50,000 is roughly the start, not your gross, your net. We're taxed on our net. We're not taxed on our gross.
Thank God.
From that standpoint, I can match how a lot of people are.
Last question, Lenore's. I mostly wholesale properties. What are some ways to save on taxes if I'm not holding the properties more than a month? You never hold it. If you're never holding the property.
Yeah, so you're just getting straight income. Then you got your advertising. Like you're gonna have to. You're probably in position to where S-corp could make sense. There's so much more questions I have based on his question. But okay, what's your net income looking like? Like you do have to. I mean, either way, I'm always going to tell people you're going to have to lean towards holding, especially wholesalers in Asia. Like you see a lot of these deals.
Hold something.
You eventually have to hold something. But you got your all. I mean, everyone's going to tell you about mileage and marketing and office expenses and home office deduction. Like, yeah, like, I mean, yes. I mean, I'm not going to sit here and like and mention stuff that you can find out on Google. But if you're not actually holding properties and maximizing depreciation and moving money into cash flowing assets, you're going to be missing out on a lot of the major tax savings that the
And
taking advantage of.
don't forget, Lenore. I want you to know, from my perspective, you're not really in the real estate business if you don't own a property. Like, no disrespect, I was a wholesaler too for many years. I thought I was in real estate business, but you're really just in the marketing and paper. You're just moving paper around. You're not hiring contractors. You're not paying real estate taxes. You're not doing insurance. You're not taking tenants. You're not dealing with any of the stuff that comes with the ownership of real estate. All right, so we just got to keep in mind, what business are you really in when you are a wholesaler?
Yep.
That's a good question, though, Lenore. All right, Larry, it's good to see you, man. We get out of here 2:30. We got to get on.
Oh man, appreciate it, man. Good luck with your with the property blessing today.
Yeah, got the pastor coming, gonna meet us and bless the land, so we can hopefully break ground in the next few days. Roundup, it's good to see you. I'll see you on the next video, and make sure you get in touch with Larry if you got any questions for taxes. He's your man. IG, Facebook, all that stuff. Thanks, Larry. Peace.
Thank you. We're going.